Sure. This book really evolved this time last year, around November 2021. You'll recall there were headlines, bare shelves, empty shelves, supply chain breakdown, Christmas will be canceled, etc. And it was all true. You went to the supermarket. It didn't mean that every shelf was completely bare, like East Germany in the 1950s. But there were paper goods might not be there, or maybe your favorite kind of tomato sauce, or chicken, or whatever it was. There were some things there, but a lot of things weren't there, and that got worse. And then, of course, we saw gas prices skyrocket because of basically because of a lot of bad policy from the United States in terms of Keystone Pipeline and a lot of other factors. That then got worse. It eased up a little bit in the summer, but it never went away. This is a complex system. It was breaking down. That was very clear. And now we're seeing a second wave of that. And I point to, one, I don't want to overuse metaphors, but one metaphor is you have a very beautiful, expensive vase, and somebody knocks it over and it breaks into 5,000 pieces. You can't put the vase back together. You've got to go get a new one. And that's what's happened with the supply chain. What I call supply chain 1.0 from 1989 to 2019 is broken. There will be a new supply chain. There always are. Supply chains have been around since the Bronze Age, if not earlier. But the new supply chain, what I call supply chain 2.0, will look very different than the old supply chain. Right now, we're in an in-between period where things don't work well. Again, it doesn't mean total chaos, but you still see shortages. You still see higher prices, which are coming from supply chain disruptions. And these things are not easy to fix, but they can be replaced, and that's what I expect to happen. Exactly, both of those things and more. So what happened in between 1989 and 2019? Well, beginning in 89, you had the fall of the Berlin Wall. 1991, the demise of the Soviet Union. 1992, Deng Xiaoping's Southern Tour, which is when China really came into the global economy. Yeah, they had some good growth in the 80s, but the Tiananmen Square set them back, and then there was a hiatus, and then 1992 they came back on stream. So all of a sudden, it wasn't just international trading, which I had studied and worked in the 60s and 70s and even the 80s. This was true globalization, which grew in the 1990s. So all of a sudden your supply chains went from Chongqing to New York, or from Shanghai to Amsterdam. These are 9,000, 10,000 mile supply chains. And the more you stretch the supply chain, the more things that can go wrong. Now, why did everyone do this? And also there was, around that time, increased computing power, artificial intelligence, better applied mathematics, and more data gathering created supply chain science. I make the point, supply chain has been around since the Bronze Age, but supply chain science was relatively new. It was all driven by efficiency. Lower costs, lower costs, lower costs, kind of the Walmart model. And it worked. Either lower costs mean either bigger margins for producers or lower costs for customers, or both. And it worked. But there were hidden costs in the process. And the hidden costs were, when you stretch things that far and have that many inputs and that many things that can go wrong, you've created a very fragile system. And now we're seeing the hidden costs come to light to break down. So what does the new supply chain look like? A couple of things. I see the creation of what I call a college of nations, basically a group of like-minded countries that will continue to trade with each other, will rely on each other for outsourcing, but it won't be everybody. It'll be like a club, and it'll be the liberal, democratic, good rule of law societies that respect human rights. So United States, Canada, Australia, Japan, New Zealand, Western Europe, and then there'll be some other countries that will be in the club, India, Brazil, and a few others. And they'll trade with each other and build factories in each other's countries. So you still have supply chains, but it'll be much more compact. China will be completely decoupled. And by the way, that's a mutual view. The U.S. is decoupling from China, but China wants to decouple from the United States just as badly. So China's going to be out of this college of nations, as I describe it. They're going to have to form their own club. So what you're going to end up with is, will countries trade with each other? Yes. But it'll look more like the 1950s and 1960s, where you have like-minded countries. You're either in the club or not in the club, but the U.S. and China are going to be running two different clubs, because that has implications for economic growth, currencies, direct foreign investment, and so forth. But it's going to evolve that way. It's happening already. both policies are intentional. I wouldn't say they're using COVID to direct the economy to decouple from the United States. Xi Jinping wants to decouple anyway. And let me just give you a counter example. So Taiwan Semiconductor Manufacturing Corporation in Taiwan is the world's largest and most sophisticated, most advanced semiconductor manufacturer in the world. They have announced in recent months that they're building 2 plants in Arizona, over $10 billion each. These plants take 5 years to build. They're very, very challenging to build semiconductor fabrication, so-called fabs. So why is Taiwan Semiconductor putting $20 billion to build 2 fabs in Arizona? Why not build them in Taiwan? Why not build them in China, for that matter, where there are certain advantages? Well, the answer is they're looking at the world ahead. They see a potential invasion of Taiwan by China. And the U.S. military has a theory, what we call the broken nest theory. And it actually comes from a Chinese proverb, ironically. It says, if the nest is broken, how can the eggs be intact? And of course, the answer is they can't. So if China invades Taiwan, the first thing that's going to happen, either the Taiwanese or the United States are going to destroy Taiwan Semiconductor's plants. We're not going to let China take over Taiwan and have all that technology. We're going to just burn those plants to the ground, basically. And Taiwan Semiconductor knows that's like, okay, we'll build in the United States and keep our company going. That's an example of, you can call it onshoring. Janet Yellen calls it friendshoring. There are other names for it, but that's an example of this College of Nations being willing to trade with each other and not rely on extended supply chains to China. I get to the end of the book, I do talk about winners and losers. I'm very critical of a lot of public policy and a lot of what's going on. I describe it in detail, but I don't like to do that without offering, forecasts and solutions and so forth. And you're right, one of the big winners out of this is going to be the United States, and I would put Canada in the same camp, because these are high-paying jobs. I mean, people work in semiconductor factories. They're, not everybody has a PhD, but you need some training, you need some skills. Those are, whether they're union jobs or not, they're high-paying jobs with benefits. They're going to be coming home to the United States, and they're going to be lost to a place like China. Now, China's vowed to build up their own semiconductor industry, but they don't have the technology. They can make, kind of 10 nanometer, 15 nanometer chips, but they can't make the 3 and 5 nanometer chips that Taiwan Semiconductor can make. So I do go through winners and losers, and you're right. I think the U.S., because the U.S. has the technology and the workforce and an educated workforce and so forth, it'll be one of the winners. But I also see India as being one of the big winners in this as well.